Hey guys, it's your big dreamer and doer G Dinero coming to you today with another TA Tuesday. This time it's Tuesday, January 27th, 2026, and we'll talk about things like Bitcoin, Solana, MicroStrategy, and Tesla, and how everything is down a little bit right now, right? We'll go over maybe some of the reasons as to why, things like tariffs and world tensions, quite frankly, and tensions here within the United States and certain parts of the United States. But please remember, none of this is tax, legal, financial, investment advice. It's for educational purposes. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. And a huge special thank you goes out to Capumax. Capumax, she writes, huge thank you, G and John C. I'll be honest, options always intimidated me. I've been learning for a while, but actually felt like a big leap, right? But actually starting felt like a big leap. What really changed for her with this community was the transparency, seeing you openly share your trades through the G tracker and watching both you and community members post trade ideas, executions, and outcomes, wins and lessons learned. It made it feel real and doable. What I appreciate most is your patience and genuine care. You don't rush people, you don't talk down to anyone, and you take the time to explain the why behind the decisions. That combination of openness and calm guidance made it much easier to build confidence. Since joining, I've finally taken action. I'm still very much learning, still making small mistakes, and still a student, but I understand more than I did before, and I feel supported while learning. The community itself has been a big part of that. People are open, encouraging, and willing to share their thought processes, which makes learning feel safe instead of intimidating. Grateful for the transparency, the patience, and the care that you've put into building this. Very glad to be here. Thank you, Sensei. So, Capumax, thank you for taking the time to write such a detailed and, quite frankly, a very loving message back to John and I for what we've created here with the community. And that was the goal all along, was to make it a welcoming, or a safe, welcoming place for people to come and to actually learn the mechanics behind things, right? It's not always about somebody giving you a trade idea and following it blindly. That doesn't help you learn really at all. What does help you learn is understanding the mechanics behind it, getting your questions answered, and feeling safe and confident in your decisions. And it sounds like that we've delivered for you. So Capumax, thank you so much for taking the time to share this with everybody else. And what she's talking about, guys, is the community. I'll be quick about it. It's a safe place where you can come and learn, right? Learn how to trade, learn how to invest, learn how to maybe set up a portfolio the right way, how to assess risk, all of those different things. While I don't give specific financial advice and say, go buy this or go sell that, and I definitely don't manage it for you, you're on your own, I will teach you how to fish in this community. That's the goal at the end of the day. You get a lot of things like community-only videos. We do a Ask Me Anything. I do those like every other Friday. They go on for like an hour and a half to 2 hours, guys. I just get drilled with questions and I answer them until I have no energy left, honestly, at the end of the day. So if that sounds like for you, and you have a tracking device, basically the G Dinero tracker, not device, but app, G Dinero tracker, where you can actually put in your options trades and track them on a regular basis so that you don't have to be glued to the charts all day long. You can literally pull this thing up, take a look at it. It's color coded and everything else. If everything is green and blue, you're safe. You don't have to worry about anything. You just take action on the ones that are orange and red. It helps you be able to go live your life and still successfully trade options at the same time. That's the G tracker, and that you get it at a 50% discount, basically $25 off the regular price when you're a part of the community. So that's gdinerocoaching.com/premier. With no further ado, let's jump right into the charts. All right, guys, as always, we're going to start right here with the Bitcoin TABI model. The TABI model actually flashed light green last night. It flashed light green last night. I actually captured a screenshot of it. This morning I wake up and it's back to yellow again. So it's, let me just refresh this just to make sure. Yep, we're still yellow this morning. So you'll notice that we are yellow on the Bitcoin TABI model. That is considered to be neutral. We've been pretty much neutral for the last, I don't know, year, just about the last year. A couple little spots of light orange, which is starting to get overheated, but we never really went into the dark orange, the light red, or the dark red. So the market never really got overheated per the Bitcoin TABI model. Now, short-term holder cost basis has dropped. It's now 96,158. I remember when I first started tracking this, it was up at like 103, 104, 105, right? It has dropped a full, what, $10,000 over the last couple of months because of this big drop that we've had, and because that short-term holder cost basis keeps moving to the right. It keeps moving closer to us here in the future, right? It's 155 days back. So huge shout out and thanks to James Check over there at Check on Chain. That's where I get these numbers from. The true market mean, which is the average cost of all coins on the network that are actually doing something, exchanging hands and moving, have moved at least once in the last 10 years. And then the realized price, so the true market means at just under 81,000 right now. Think of that as a really strong level of support, that $80,000 mark. And then if you go down one more level to the realized price is the average price paid for all tokens on the network. That includes the Satoshi coins, which were virtually free, as well as a lot of those early coins that still haven't moved and or the ones that have been lost. Somebody might have mined them back when Bitcoin was $100 a token and done 100 or 1,000 tokens and lost the computer, right? The infamous guy that lost it on his hard drive and he wanted to dig up a landfill, I think in the UK, in order to try to find his Bitcoin stash worth now in the billions of dollars. So those are your three main levels to watch. The realized price is like worst case scenario, how far it could drop. $70,000. What's important about that? That is right where that volume node starts to grow. So that would be the deepest, that would be probably the strongest support. Worst case scenario is realized price. First line of support would be this 81,000, which we've been down to once already. Wouldn't be surprised to see it again at some point. Meyer multiple is weak. It's below 1. Same thing over here. The MVRVZ score is pretty much non-existent, down near 1. Historical volatility is way lower than what we've seen in the past. If we go over to the monthly, we were printing a really big green candle here on the monthly. And then all the tensions, all the macro tensions started back up again. And unfortunately, you would think that Bitcoin acts as a safe haven asset, right? Like gold does, like a lot of these, some of these other commodities do. It didn't. It acts like a risk on asset. And as soon as the world starts having issues, it seems like this thing starts to sell off. At least that's my opinion. So you'll note that we are relatively flat, right? We started off over the last 3 months prior to January, where we are right now. So at the end of last year, the last quarter of last year, October, November, December, red, just dropping like a rock, started to print a green candle, looked like we were turning the corner. Now it's looking like it's going to end flat. That, if you look at that candle, that's like a doji right there, right? It's just a plus sign, it looks like. That's telling you that the market is indecisive. It kind of wants to go up. It kind of wants to go down. And right now, it doesn't know what it wants to do. And for the month is pretty much neutral. It is plus 0.24% in January right now in real time. The weekly, you'll note that we had a couple green weeks and a red week, a green, red. It's like, thinks it's Christmas time right now, right? It's just going back and forth. But notice, it's pretty much flatlined. You would think we're in this highly volatile era, right? With all the news headlines and people's sentiment around Bitcoin and everything else. But when you look at it here on the weekly, it's pretty much flat. And the same thing, if you look down at the mean reversion, yeah, we were mean reverted to the downside, but not by much. And now we're just trickling our way back up to neutral again right here. Same thing, RSI was really oversold back here. And now we're just starting to make our way back up kind of to the average of where we've been lately with the RSI. That's the yellow signal line that you see it about to cross right here. So pretty much neutral right there. If we look at it on the daily, we are now going back down. We had this pump back here last week. If I lower this so I can read where it was, the pump was on the 14th of January. So about a week, a little over 2 weeks ago almost now. And then just down ever since, right? Just keeps going down, 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 right back to our happy place right here on the point of control, this red line that you see going across, which is at 87,500. I remember talking about that on last week's video and the video before and the video before. I've been talking about the $87,500 level for weeks now, guys. It's the line in this, it's the current line in the sand. I know I have the $95,000 line in the sand above that. That's the line that we have to get above and stay above in order to start this march back up again. But it's going to take some strength in order to do so. Something of note is the 2-year simple moving average is this line that you see crossing right here. Here's the 1-year simple moving average, 200-day moving average, 1-year simple moving average, 2-year simple moving average. Let's take a look down, and here is the 3-year right at 67,000 and the 4-year down at around 57,000. Oftentimes, the 4-year moving average will act as the bottom of the support in a bear market, historically. Doesn't mean that'll happen in the future, but historically. So that's where I'm getting some of my numbers from, guys, as to where we could go down to. Also, you'll note that right here, this is the point of control, $67,000 over the last few years, last couple of years, I should say. So if we break down, I see the first line of defense as this 2-year moving average, somewhere around 85.6 if we drop below where we are now. Then down to the true market mean, right? That would be right around $80,714, call it 81,000. If that were to break down, there's not a lot of volume in between. It would drop all the way down here to 60, somewhere in the $60,000 to $70,000 range. Be prepared. I would back up the truck at that point. I still buy where we are right now. I convert fiat to Bitcoin every day. I don't consider it buying. I consider it converting. Now, something to note. Remember, we've been talking about the liquidity cycle. Look at this, guys. We broke out above this level. We were at this level all at the end of last year. We turned it into final support in November. And since November, it's been hockey sticking straight up. Looked like we were going to pit stop around 102, 102 and a quarter. Nope. Keep going up. We're well over 103, $103 trillion right now on the M2 month global liquidity index, right? So this sucker is going vertical. That means the money printers are on. That liquidity typically needs to find a home. Right now, that home seems to be very popular to put it into precious metals, right? Gold, silver, copper, all starting to go and move up. Those seem to be where the puck is going right now. Where will it be in the future, though? I would have to think that Bitcoin will capture some of this store of value moving forward at some point. On the 4-hour, I'm only going to be here briefly, guys. We keep getting buy signals. Notice these buy signals are showing up every time we get down near this light blue line, which is the 78.6% fib level. That's right around $85,000, let's call it, right? Plus or minus $500. So $85,000, we keep getting buy signals every time we get down to there. Then as soon as we get up over 92, we get sell signals. That's because it's approaching the short-term holder cost basis. When it approaches the short-term holder cost basis, people sell their tokens. Now, what is the current short-term holder cost basis? Let me move this down so I can see. So this should be, if I remember correctly, up to, it was August 16th last week. It should be up to about August 23rd right now. So we're making our way to the right. All right, I just double checked and it is August 22nd. So if I put this on August 22nd, that was 155 days ago, right? That's considered a short-term holder. So short-term holders, you notice we've got to work through these last little bit that we're up over $100,000. And then by the time we get over here to the 12th of November, which will be about 6 more weeks, 6 weeks from now, that short-term holder cost basis is going to drop dramatically. When it does, getting up over it will be a lot easier. Right now, every time we get anywhere near it, these short-term holders are selling off, and that's what's causing a lot of this sell-off here, sell-off here. It's just the bears, quote unquote, winning out. It's people saying, hey, it got back up over my cost basis. I'm out. I'm going to wait for this thing to really put in a solid bottom. That's their opinion. I'm of the opinion that it's starting to show bottoming signs now. Doesn't mean it can't go further, but I can always layer in the deeper it goes down. That's how I think about Bitcoin right now. If we come over here to Solana BTC, I took off the support and resistance boxes because it's pretty much been the same thing. You get up here over at 0.002. That's resistance, support 0.0014. It's been the same thing, guys, for a year. It's literally been trading in this narrow range. Something interesting to note, we've come nowhere near the all-time high. The all-time high is all the way back here in 2021 when it was 0.0047. To put it into perspective, we're at 0.0014 right now. So if we were to look at this on a big macro scale, we're nowhere near where this thing has peaked out before. It means that Solana, generally speaking, in Bitcoin terms, has been weak. We've had flashes along the way where it looked like it was going to return, but overall, Solana versus Bitcoin has been very weak. I also heard somewhere that in history, only two assets have ever gotten back up above their all-time high when priced in Bitcoin. That is XRP and Doge. I'm not saying to go run out and buy either one of those because both of those have since lost that all-time high and have never returned to it. And I think the last time they were up above their all-time high was 2021. So XRP set an all-time high, let's say back in 17, 18, 19, whenever it came out, dropped like a rock, went back up over and set a new all-time high. Same thing with Doge. It set an all-time high, dropped, and went back up and set a new all-time high when priced in Bitcoin. Those are the only two assets ever in history. Since then, neither one of them have come anywhere close to their all-time high priced in Bitcoin, and none of the other 30 million altcoins have either. So that should tell you something about which one should probably have a little bit heavier weighting in your portfolio. Hint, it's that orange one, Bitcoin, okay? Doesn't mean that I don't believe in Solana. I love Solana for payments and other things. So I have a stack of Solana. Solana on the daily has been making lower lows all the way since back there in September 18th. We are right here on the bubble, guys. This is this 115 to 120 range that has been acting as support. You can see the point of control, this red line right here. That's at about 127, let's call it. When we're below that, we are below the point of control where the most tokens have exchanged hands. And we're getting down near the bottom of this volume node right here. Dropping below that wouldn't be good, right? We want to hold at least this $100 level or so right here. Was at 95.16. We don't want to set a lower low and set a precedence. Right now, slightly mean reverted to the downside. RSI is below 50, so those are some buying signals right there. If we go over on the 4-hour chart here, same type thing. We keep getting buying signals every time we get down here near 115, 120. Doesn't mean it can't go lower. It just means that seems to be the bottom of the range that we're in right now. The top of the range is up at 145, 150. We haven't been able to get above that for months now, right? And if I move this, I don't know why it moved up on all my charts. We haven't been above 150 since back in November, guys, early November. So it's just been months since we've gotten up above 150. That is the serious resistance. Really, it starts at around 145 right now to the upside. To the downside, support is right where we are. We drop below this, we could be going down to 95 or 100 if interest in the crypto market doesn't come back quickly. Coming over here to MicroStrategy. MicroStrategy is holding the line. It's going sideways right now. I did list it as going down this week on the, the title slide. But really, we are right back to neutral again. We were significantly mean reverted to the downside on the daily. The most mean reverted we've been in years. Now we're back up to the midline. You'll note that the NAV value continues to head down, whether you look at the undiluted or the fully diluted mNAV. I've had people challenge me and argue with me on that. Part of it in my brain, guys, is I understand you need to use the full enterprise value. If you're doing so, MicroStrategy's at like a 1, 1.01, 1.02, 1.05. It's got a tiny premium. But if you look at it as the Bitcoin on the balance sheet only, and either the current number of shares or the fully diluted number of shares if they convert all of their convertible bonds, and or the STRK gets fully converted into MicroStrategy shares. That's where the fully diluted comes from. So somewhere between 0.86 and 0.95, it still, to me, is trading at a discount to the amount of Bitcoin that they hold on the balance sheet. It's only going to take a small move of Bitcoin, and Saylor's been buying Bitcoin like a drunken sailor this year. At the rate he's going, if he were to continue the same rate as he has over the last 4 weeks, he would have over MicroStrategy would have over 1 million Bitcoin before the end of the year. So keep that in your pocket. Earnings is coming up. Earnings is probably not going to be good. Let's come over here. You can see it a little bit more clearly. Earnings is likely going to be weak, guys. Why? Because they're going to value the company based on its performance in the fourth quarter. Its performance is the performance of Bitcoin in the fourth quarter. Bitcoin was up over 108, 110, something like that at the end of September of 2025. And by the end of the year last year, it was well under $100,000. So if you look, it's going to show, they're going to show a massive loss for the quarter based on their Bitcoin holdings going down on the quarter. That's what's going to happen on the earnings. Here on the mean reversion, we are slightly mean reverted to the downside. We've got RSI slightly below the mean. We've got MACD pretty much right at the mean. Implied volatility started to come back a little. You see a little bit of green down there, but it's back red again. So the volatility is starting to go out. It's just kind of going sideways. It meaning MicroStrategy has traded between 150 and 170 with little blips above or below that, but 150 to 170 in that narrow $20 range for the last couple of months, right? So resistance to the upside is about 185, 190 to the upside. We would run into resistance at the 50-day moving average at 173 before we even got anywhere near that. Support to the downside right around 150. Every time we've gotten down near 150, it gets bought right back up again. Tesla is still generally in an uptrend ever since back here. I think this was the tariff tantrum back here on April 7th. Yes, we've hit an all-time high and pulled back, but we did set a higher low, at least as of right now. So the general trend, generally speaking, higher highs, higher lows, still generally up and to the right now. We have filled in these two gaps at the top. These two down here near the bottom did not fill in. The one at the bottom, remember I said, is kind of weak because we're already trading in that range regularly. This one, though, would be the one, if any of them got filled, that would be the one. It all depends on really how the sentiment is coming out of earnings. You notice that going into earnings, we printed a red candle yesterday. That's on the daily. If we come over here onto the 4-hour, the general trend, and this general trend is since Tuesday, December 23rd, the general trend has been down and to the right. And we're having trouble getting back up over 450. That's the immediate resistance to the upside, but we've been supporting every time we get down near 420, of course, because it's Elon, right? Notice we're now starting to ping pong in between. The volatility is starting to get shallower, right? We had this massive drop, big rise, somewhat smaller drop, somewhat larger rise this time, but it's starting to work its way into this like 435, just trading on either side of it. That means that those confluence bands or Bollinger bands, those are going to start to narrow. And as they narrow, you should expect a significant move one way or the other. Coming into earnings, what I've noticed is a lot of times, whichever direction it's starting to trend, it continues on that, at least in the short term. Longer term, it can turn. But if we're trending down going into this earnings, I would expect it to continue down. Doesn't always do that. It's just a pattern that I've noticed along the way, okay? But right now we're at the mean. I mean, literally at minus 0.12. That's at the mean. RSI is at 47.50 is the mean. MACD is at minus 0.5. It's at the mean, right? Like everything is pretty much at the zero line. It's this wait and see. Let's see. What does Elon say during the earnings? Because I think the earnings themselves aren't going to be great. I think it's going to be more based on what does he say. Immediate support to the downside, 434. That's the 100-day moving average. Immediate resistance to the upside, 442. That's the 50-day moving average. Notice those two don't have very much distance in between them. If we were to go down again, 420 is the next level of support heading down, and 450, maybe you can make an argument for even up to 460 as resistance to the upside, but 450 is the more immediate resistance to the upside. Again, the new segment where I use only free indicators that are built into TradingView to give you an idea of what TradingView has to offer by itself. These are the Bollinger Bands. You notice we were up near the top of the bands. We had RSI well above 50. It was at 65. MACD, we started to run out of steam here on the histogram. The histogram is this green and red thing, these bars in the middle. And as this move starts to lose strength, dark green is really strong move to the upside. Notice it goes to a light green, almost like a light bluish color right here. That tells you it's starting to lose steam. The move is starting to lose steam. And notice that the move started to lose steam. Would that have been a good place to sell? Perhaps, right? Or sell a covered call. It depends. Are you a hodler or are you a trader, right? Are you just going to buy and hold for years and years and years? Or do you want to trade this thing in and out? Maybe it's in an IRA where you can do it tax-free. Maybe you live in Dubai like a couple of my friends do that I've been working with for a couple of years, right? It's all up to you. But you'll notice that as the RSI starts to sell off, you'll notice the MACD histogram starts to lose steam. We get a crossover right here. Crossovers are typically where you get sell signals, right? Those are the selling signals. By the time it did that though, this time, by the time the crossover occurred, you'll notice that you were already back down to the midline. You would have missed this blue line going down the middle of the Bollinger Bands. You would have missed the biggest part of the move. So when you're near the top of the Bollinger Bands, that's the red line here at the top, though, that's the time to look to trim a position or sell a covered call. Or close out a short put that you might have. When we're down here at the green line of the Bollinger Bands, as we were over here, those are buying signals. Those are times where you would want to close out that covered call, buy back the shares, sell a put if you're comfortable doing so, buy a leaps, buy a synthetic long, right? Depending on how deep the move is. Did it go all the way out of the bands? Same thing over here. Notice RSI here was at 27.68. That's telling you it is significantly oversold, aka needs to be bought up, right? Not financial advice, just technical advice right here, guys. Crossover on MACD, is that right there? That is your like confirmation. Notice the confirmation happened a few candles, significant number of candles afterwards, right? Here's the crossover here on Thursday, the 22nd at 4 a.m. in the pre-market, but RSI bottomed out on Tuesday, the 20th at noon. So there's a couple of days right there in between. It depends. Do you want to try to front run the trend or do you want to try to wait for confirmation? It all depends on what kind of trader you are at the end of the day. But these are just some of the tools that are free. You'll also notice that with the view that I have in here, which is the last few months, the point of control is at 445, hence why we've basically been trading up and down on either side of it. That's the free one. If we come over here now to the Nvidia daily chart, we're still in a structural uptrend, although we've really been sideways more than anything since the middle of the summertime, right? We've been going sideways since the middle of the summertime, trending straight sideways, trading in a very narrow range between 165 and 195, right? A $30 range. One spike above it, but other than that, we've been in that range for months now, like 7 months. So that's on the daily. You'll also note, see how mean reversion hasn't been all the way up in this red zone since back in here. It hasn't been down in the green zone at all. It's just been going sideways. RSI has been trading on either side of 50, with the one exception that I was talking about where we spiked up to 212. That little spike caused RSI to go up above 70. Would it have been a good idea to sell when it's above 70? According to this, yes. You'll note the mean reversion tool didn't even get up over into one standard deviation, but RSI did, and we have a crossover right here on MACD. So that's why I have both on a lot of my charts, because Sometimes one is more sensitive than the other. If we look here on the 4-hour, we can really see it. 4-hour, we have a giant mean reversion spike. We have RSI up at 88.58. Guys, that's telling you to sell. And I sold some really aggressive covered calls back then that generated a lot of dough. So now you see we're in this support zone and just trading sideways on the point of control right here, right around 181, 182. We are just slightly mean reverted to the upside. RSI is slightly above 50 and MACD is slightly positive. But for all intents and purposes, it's almost like a waiting game. I've been saying personally, to me, Nvidia is a buy when we get down below 180, really down 175, 170. I might nibble and pick up a few more shares. I'm not buying leaps down there, though, because they're still pretty expensive right now. Palantir is really starting to kind of show some signs of weakness, in my opinion. We had a solid sell signal here on the daily. This, you'll see it showed up on the 4-hour, but not on the daily. We got another sell signal over here. You'll note that the move was still trickling upwards. The price was trickling upwards while the RSI was trickling downwards, making lower highs. That's a bearish divergence. That means there's usually an impending sell-off coming. You can see right here what I mean. Sell signal, sells off hard. Sell signal, sells off hard. Sell signal, sells off hard. Sell signal, starts to sell off, little spike, and then sells off hard. Buy signal, bump, bounce afterwards. So really, let mean reversion and RSI be your friends here. When you're down near the bottom of this green band or down below 30 on RSI, those are buying signals. Okay, I'm not telling you to go buy. I'm just saying that's where I'm looking to add to my position. But I may be trimming some of my position because I have like a uneven number of shares. I try to think in blocks of 100. I have an uneven number of shares, so I'll probably be pairing off some of those uneven ones on the next spike up just to wait and see what happens with Palantir, right? Palantir is software as a service. Software as a service may start getting replaced by some of these AI agents and other things that are out there, things like macro hard with XAI, right? They're trying to replace your Word and Excel and your other Microsoft products that are there. So I'm just starting to think ahead and go, okay, I've made a bunch of money on the cover calls that I've been doing over there. Let me go ahead and trim some of these shares, and I can take that money and perhaps put it elsewhere into a different investment. Not saying I'm selling off my entire Palantir. I'm keeping the bulk of it, just going to pair off a little bit of it. MicroStrategy Tesla pair started to show signs of life and then flatlined again. So right now going sideways, meaning neither MicroStrategy nor Tesla is going ballistic to the upside or going ballistic to the downside. Notice both of them are kind of trading sideways and slowly trickling, trickling down. Well, that's why this thing is pretty much trading sideways right now, because one is not overpowering the other. We had the high that we talked about back here where you could get 1.5 Tesla shares for every MicroStrategy share. And then down here, you could get 3 MicroStrategy shares for every 1 Tesla share that you had. So the pair is alive. It's better. You're almost better off doing it on a daily chart than on a 4-hour is what I've found, because the 4-hour can give you way too many signals otherwise. It was a great pair for a long while until MicroStrategy broke down from July through the end of the year. Here, same thing with the MicroStrategy IBIT pair. It's been as high as 9.67. That was back in November of 2024, right after the election when MicroStrategy went ballistic. And it's been as low lately as just under 3, meaning it only took 3 IBIT shares to get 1 MicroStrategy share. So how do you play that? When it's near the top of the range, you sell your MicroStrategy for IBIT because you're getting more IBIT shares, more Bitcoin for your MicroStrategy. It means MicroStrategy is selling at a premium to the Bitcoin on their balance sheet. Down here, MicroStrategy is selling at a discount to the Bitcoin on the balance sheet. So it only takes 3 shares of IBIT to turn around and get back a MicroStrategy share. So how would that look? Let's say up here you sold 1 MicroStrategy share, and I'm going to round that off to 9, not to 10. I'm going to round it down to 9. So you sold 1 MicroStrategy share and you got 9 shares of IBIT. Down here, you take your 9 shares of IBIT and you get back 3 shares of MicroStrategy. You increase your MicroStrategy holdings by 300% is a way of looking at it. You could also use the ARB Cloud for that. I tend to use the pair trading chart instead. Over here, this guy, gold just keeps making higher highs, guys. Higher highs, higher lows, higher highs, higher lows. We are been in a structural uptrend. This is a world that is genuinely nervous about what's going to happen in the future, right? If we back out and we look at this thing, it's hard to believe that back here in August, we were talking about GLD, right? This is the gold ETF, was around 300. It's now up at 469. If instead we switch this to XAUUSD, right? If we switched it over here to gold itself, if we look back into August, where was I? Back here in August before it took off, gold was at 3,300 an ounce. It's hitting 5,111 an ounce is what it hit. It's currently at 50.74, right? So it's just gone ballistic. But so many people see this and they go, I'm going to run out and go buy gold because it's the top performing asset. I got a new chart that I want to share with you and show you. Maybe you want to like pump the brakes on that for a second. And if you don't have gold, you might want to wait because this is Bitcoin priced in gold. So Bitcoin priced in gold has been as high as $40.77 ounces of gold per one Bitcoin. 40.77 ounces of gold for one Bitcoin back here in December of 2024, because gold hadn't really started running yet, but Bitcoin skyrocketed. Since then, it's been structurally going down. It went down all the way to the tariffs, bounced back up again into August. But ever since crypto, Bitcoin, whatever you want to call it, it's been out of favor. Gold has taken over, right? Remember we said in August, gold took over. When it took over, it caused this to drop from around 36, 37 ounces of gold for one Bitcoin down to 17.31. How do you play that? If you have gold, you could sell gold and get Bitcoin. If you have GLD, the gold ETF, you could sell the ETF and get Bitcoin. And you'll get a lot of Bitcoin, right? If it just goes back up to 34 ounces, you've doubled your Bitcoin. Basically, your value is doubled. So let's say you had 17 and a half ounces of gold. You turn around and you got one Bitcoin right now. And then all of a sudden, gold pulls back to 4,000 an ounce, which I don't see happening. And Bitcoin goes to 150,000, this thing flip-flops and you've doubled your money versus had you sat in gold and rode it back down again. So the key is don't chase replace type thing. Again, not financial advice, friendly advice. And if you don't have any gold, it's okay. Could you add a little bit? Yeah, there's ways that you could add it safely, right? You could buy the GLD ETF, for instance, and turn around and do a synthetic short against it that collars the position there. So if it goes up, you get called out and you make a little bit of money. If it pulls back, your put starts going into the money and you make money on the put side of things, right? It's almost like you're freezing your position there. And then you could play the roll game with the call side of things too and continue rolling that out month after month to try to capture a little bit more value out of your gold. There's ways to do it, is what I'm saying. But when something looks like that, man, I just don't see the buying signals. All I see on the chart are sell signals right now. But it doesn't mean it can't continue. Again, the world keeps screwing up like it is right now, guys. If these central banks are stacking gold like madmen and women all over the world, if the dollar is going to be eventually replaced, the treasuries essentially replaced by gold as the reserve asset, not the currency. The currency will remain the US dollar, but the reserve asset right now is essentially US treasuries. And there's less and less confidence in those all over the world. You got the Japanese bond market starting to go, the yield skyrocketing, carry trades unwinding. countries wanting to exchange gold back and forth to, to pay for oil and energy and things like that. When all that starts to happen, being in commodities, and it's playing out like Larry Lepard said in the big print. So Larry, shout out to you for the big print. You said that this decade, we're halfway through it, that this decade was going to be the one where commodities were all of a sudden going to be all the rage again. And you said that back when gold was under $3,000. You made that call because that's when you were writing the book. So well done on that one. As we're going along, CPER, that's copper. I'll throw that in there. It's showing sell signals also. It's had a significant run up. I took a tiny position in it with a complicated option strategy that I'm not going to try to explain right here, but it was very protective, very conservative. I'm like, if I double my money over the next 2 years, I'm happy with that. But at the same time, if it pulls back, at least I'm protected to the downside too. So that's all I'll say about that. HIMS, I did sell a cover call on HIMS, right? It spiked just a little bit. I got tired of sitting around waiting for this thing to really spike hard. So those of you that are in my covered call challenge, you can appreciate this. Was it the perfect time to do it? Nope. I should have done it back over here, but I was waiting for it to get back up towards the 50-day moving average before I did it. Never made it there back on January 7th. This time with a little bit of a bump, I sold the $35, which is where the 50-day moving average is. My thought is that that's going to act as resistance. That's also where the point of control is. That's right where my cursor is right now. So selling the 35 when it's down at 30 is a safe play to me, right? Not saying it's not financial advice, but for me, I saw that as safety because I'm selling it against a $22 leaps. So $22 leaps, it's deep in the money still by $8 right now. And if I were to get called out at 35, I would still make the spread on that. I would almost get the money back that I paid for the leaps in the first place. But I'm not going to get called out. We're gonna manage this. Is sold out for about 32 days as of yesterday, so 31 days today. That's HIMS. The S's, right? The S's. This is going to be a longer one today, guys. I'm sorry if you're still here hanging on. God bless you for listening to me rant and rave for forever. The S's, you notice they sold off a little bit. Everybody asks, when's the best time to buy STRC? I buy STRC pretty much every day, guys. Every day I'm rolling the profits into STRC. If something gets significantly undervalued, right? Tesla just dropped to below 420 last week. I turned around and sold a little bit of the STRC and bought myself some more Tesla. I'm not buying Tesla up at 450, but I'll buy it down below 420. I understand, like, what difference is it going to make if it's $8,000 one day? I'm just more concerned about the difference it would make if it's only 500 at the end of this year or 600 at the end of this year. I know there are predictions for it to be higher, but I play relatively safely. I wait. I'm patient on my buys. I don't just buy to go buy. I'll turn around and I'll wait and I'll let it drop and fall down to the price that I want to get it at. STRC is the exception, because it's designed to stay at par value, and it's been at par value now for weeks until just recently where we came off par value here and started to pull back. But buying it at 99.27 or buying it at 100, so you can buy basically, 0.7% more when it's at the price that it's at today. To me, I'm not investing in STRC to try to get that capital appreciation from 99.27 to $100, that 0.7% increase. That's not why I'm invested in STRC. I'm in it for the dividend that comes month after month, no matter what. And it's coming in at about 92 cents on the dollar right now, or on a 92 cents on a share, 92 cents a share. So for every one share, you're almost making $1 per share. Sure, you can buy a couple more shares when it's at 99.27. That's not how fixed income is designed to work. If you want to trade, go trade STRD, and good luck with it, right? Because it does trade like a junk bond. So you better be really good at it and buying it only when it's down at 75 and selling it when it's up at 78. And you're essentially capturing the spread, which is kind of what the dividend would be if they pay it out. Because remember, that's the one that's non-cumulative. They don't have to pay it out every single time. That's designed for traders. STRC, it's kind of like a money market is what I call it. It's designed almost to be more like a money market. STRF is like a longer term version of it where you don't get the dividends monthly, but you get them quarterly instead. But notice it's back down close to par value. It was trading up at 105, 110. It's been as high as in the 120s. Same thing, STRK, that's the one that's convertible over into 10 shares of STRK, convertible into 1 share of MicroStrategy. Well, when MicroStrategy is going sky high, that one looks really appealing and you should be able to sell the shares for more than par value. But when MicroStrategy is sucking wind, so is that one, and it's going to be well below par value. Right now, it's at 85. So these two at the top are the most tradable. These two at the bottom, this is the long-term money market, we'll call it. And this is the short-term money market where you want to know that when you go to sell it, you can sell it for somewhere within 1 to 2% of what you paid for it anyway. If you held it for 6 months, and you made almost 1% per month, you'll be just shy of making 6% on it. So you could weather a drop from 100 all the way down to 94, and your money stayed the same effectively. It's a stretch, I'm sure. And then you have GLW. GLW is smoking it, guys. I said sell a $95 cover call right here. That's what I did. $95 is down here. And we broke out above that level, setting new all-time highs right now with Corning. Corning is hit 103.24 going into earnings, and it is skyrocketing right now, skyrocketing. Am I worried about the fact that I have a $95 cover call expiring in a month from now or 3 weeks? Not at all. Not at all. I'll look to roll that thing. It'll likely pull back because it was mean reverted. It started to pull back. I could have, made a couple bucks or a little bit of money off of it. I thought it would continue pulling back. Instead, we're sky high. But what happened the last time RSI was up over 80? We're at 82. Well, back here we hit 89 and then sold off really hard afterwards. Right now we're up here at 80, 81, 82. What will likely happen? It'll pull back and probably retest this level as support. See, the last time we broke above 95, we weren't able to hold it. We kept using it as resistance, resistance, resistance all through here. Once we break up above, I wouldn't be surprised to see it come back down and retest that level as support before going back up again. If it retests that level of support and it does so by around 220, that means my covered call is at the money. That means to buy it back, it's only going to cost me pennies. So that's how I'm playing that. And again, I don't worry about it as long as there's still time value left in the option, which there's plenty of time value left in that option. It's nothing to be worried about. All right, guys, that one went way longer than I wanted it to. I don't know why it went so long, but thanks for sticking in there with me. If you want to see more content like this, be sure to like this video. Make sure you comment below. What'd you like best? What did you learn? What would you like to see more of? Make sure you're subscribed to the channel and turn the notifications on so that every time I post a video, you see it, right? Some of these are very time sensitive that I'm putting out, others not so much so. Also, it'll get you to be able to watch more videos like mine. I'm not the only one making this kind of content on the internet. I'm not necessarily the best at it. I learn a lot from others. So subscribing to my channel and turning notifications on will give you more of what those other folks are doing as well. That way you can determine for yourself which is the most valuable of information to you. Book a course. You can do that over at gdenarocoaching.com. I teach a course on TradingView and technical analysis where I go over all things charts, all these different terms and terminology and VRVP and point of control and linear regression channels and fib levels and all that. You'll learn all that over at gdenarocoaching.com. Book the TradingView and technical analysis course. If instead you're interested in options, you would want to book the understanding options course. You heard me talk a lot about options today, selling covered calls, buying puts, selling puts, all those different things. You'll learn how to do all that and more over at G Denaro Coaching. You could also join the community there. Remember, the premier phase is here, guys. The premier phase is $125 a month. It's $4 a day to be in this community. And you're getting me as your coach every single day in there. I've probably commented on a post or posted in there every single day since we launched the community almost 3 months ago now. So we're coming up on our 3-month anniversary. We've got a very vibrant, very active group that I notice is really, really helping each other right now. And I'm seeing light bulbs going off in there every single day. So that brings joy to my heart. You can get that over at gdenarocoaching.com/premier. Finally, guys, I'm G Denaro. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom so that you and your family can become more sovereign. That means you're free. You don't have to rely on anybody or anything else. You've got it under control. You know how to fish yourself. That's why this is an educational platform and not financial advice. Thanks for tuning in, and we'll see you next time. Take care.
Yo, G Denaro in the house. Charge up, let's go. G Denaro, coach of the trade, stacking that green. T at Tuesday, Money Monday, living the dream. Options popping, Bitcoin rocking, Tesla on fleet. Join the community.